watch, but Democrats say it started under Barack Obama's watch. So who gets the credit for the bull market, and can it keep going? Here to discuss, Benchmark Investments Managing Partner Kevin Kelly, Walser Wealth Management President Rebecca Walser, Forbes Media Editor-in-Chief Steve Forbes, and Susan Lee is back with us. She's right here as well. So, Steve, whose bear bull market is it anyway?
It's everyone's bull market. It began in March of 2009 when the regulators got off the back of the banks in terms of forcing them to artificially mark down their capital. Companies have gotten their acts together. And then the last 2 years, deregulation and tax cuts have really given it a boost.
Well, Rebecca, the great thing about what we've had in the past couple of years is that it's based on real economic growth. So often during the Obama era, we would get some lousy economic stats, but the market would keep going up because of other things that were happening.
Yeah, I would give that credit to the Fed and monetary policy and QE 1, 2, and 3. But also, I would definitely say that if you look at Obama, his 8 years, we had average GDP of 1.5%. His last year, we had 1.6. And when Trump came into office, his first budget said 2.3, and he hit 2.3. So I think there's a very clear dichotomy of Obama versus President Trump. Real bull market coming on strong with President Trump.
Kevin, who gets credit?
Yeah, I actually think the Fed gets credit because they started it. I mean, they went into the market, they artificially suppressed interest rates, so people went into riskier assets. And so if we look at how you grow an economy, there's two levers you pull: monetary policy and fiscal policy. And so you saw monetary policy during, Barack Obama's administration, and then you saw fiscal policy during President Trump's. And so the Fed is really dictating the market as going forward, because we saw them capitulate in 6 weeks after they raised rates in December. And that's why you've seen the recovery in the market. And so we're on a fragile economy right now that needs more fiscal policy to guide us going forward to continue to grow.
Well, it's true that there are some questions about what's happening, Susan, with the economy. Yesterday, we got a big question in terms of why the jobs growth rate was so low compared to expectations. We were expecting 180,000 new jobs. We only got 20,000 new jobs. However, the market ended up kind of flat. It didn't really sink as a result of those.
Well, wage growth was pretty good. The fastest wage gains that we've seen in 10 years. So that means Americans still have money in their wallets. And this might be a sign of the stretchiness of this bull market run, because are we at full employment? I mean, are there that many more jobs to add at this point? I think there are some positives to take away, but yes, there are some concerns as well.
And Steve, we got to remember during the Obama, I'm glad that the market went up under the Obama administration. However, it was the slowest recovery since the Great Depression. We haven't had a recovery from a recession. It was a bad recession in 2008, 2009, but it didn't have to be such a slow recovery, because the president at that time raised tax rates. He increased the number of regulations, and that slowed business growth, right?
It did indeed. And one of the things to remember is a big chunk of the stock market, the bull market, was financial engineering. Companies buying in stock, borrowing and buying in stock. The number of listed companies, half of what it was a generation ago. So big companies did well. But if you look until recently, smaller companies, which is really the juice for this economy, provides 2/3 of the new job formation, was one of the most awful periods in American history, starting to recover. So this was big company bull market. But for the economy until recently, not so good.
And Rebecca, it took the market 3 years to recover, to get back to levels before the recession, when President Obama was in power. The day after President Trump was elected, the market began to take off, and it went up 7,000 points in a year.
Yeah.
So it's clear the business community took the election of President Trump as a huge positive for the economy.
I call it the Trump bump. You know, it was funny. I was watching the election returns on Fox Business, and the futures were diving because they had priced in Hillary winning, and they weren't sure what is this guy going to win? What is he going to do? And then all of a sudden, when they started looking at it, they started going back up, and the very next day, obviously, it was huge. Obviously, President Trump, I think, has been an amazing. This is the president we needed for this economy at this time in history.
And Carl Icahn went home to start trading.
Yes,
he saw that President Trump was going to win. He's like, oh, well, this is business friendly.
That's right.
I'm going to start buying some companies.
Well, there is one thing that is not necessarily business friendly. That's the trade policies. A lot of folks in business are complaining about the tariffs, complaining that it's costing U.S. consumers and U.S. businesses a lot of money. On the other hand, you got a strong economy, you got a strong market. Doesn't that help us with the trade talks that we're having with China right now?
Well, the problem with the trade talks is we're actually having negotiations with a lot of allies, and they're not pleased with this administration, especially with the negotiating tactics that have taken place, you know, when we look at Canada, when we look at Europe. But I think the important thing when we actually dissect what's happening in the market, the non-cyclicals and the defensives are doing better. Utilities did exceptionally well last week. If we look at real estate investment trusts, they're outperforming the market this year. So everyone's worried about the slowing economy and getting more defensive because of trade and tariffs.
But Steve, staying with the trade talks themselves, the fact that we have such a strong economy and that the Chinese economy has been very weak, their stock market's been decimated, it's kind of gives us a position of arguing from strength, doesn't it?
It's the economy, but I think we could have gotten things we needed from China in terms of abuses by doing what we're finally doing now, going after specific individuals, companies, banks, sanctioning them. ZTE a few months ago, Trump spared them.
Big telecom company from China.
He could have put them out of business by denying them parts from Qualcomm and others. And so that's how you get their attention, not putting tariffs on each other. Tariffs are sales taxes, and that's what is overhanging the market. If you could have all these trade disputes, and one is coming up on autos, where we're threatening to put tariffs on every auto part and every automobile around the world, called Section 232, if you want to impress people at a cocktail party. But if you could just clear those out of the way, you'd see the market go up another 15-20%.
Susan, very quickly, what's the latest on the trade talks? Are we making real progress? Because you keep getting mixed reports.
Yeah, well, yesterday we've been hearing that it looks like the Chinese have not penciled in this meeting face-to-face with President Trump, between Chinese President Xi Jinping. And I think in this trade dispute right now, the question is about pain tolerance. How long does China have? Because they are going through a world of pain.
This panel is so good. We got to do it again in the next hour. What do you say? All right?
Hey.
More coffee.
Do we get time and a half?
Yeah.
I'm going to read about Section 232.
Don't worry. You'll get time and a half.